Hi, welcome to the market alert for December the 24th, 2014. Now, I know I said in yesterday's market alert there wouldn't be another one until after the Christmas period, but yesterday the market did what I've been forecasting it was going to do for some time now, and that was to trade through the 18,000 level. And it did it yesterday. Pre-market, you can see here the market reacting to the economic news, and there you see the 18,000 actually being hit for the very first time, and prices did continue to trade above this, which we'll see in just a moment. So the market making the all-time high of 18,000, the big psychological number that's been on the cards certainly in the last couple of weeks, and there was no doubts about it, as I kept saying in the market alert, because of the manipulation in this market assisted by the Federal Reserve, that they want the stock market to just keep going up because it makes the rest of the economy look good. The figures for the economic data is certainly manipulated and skewed as well in order to do this. And the reason I'm saying all of this is because behind it there is 21 trillions worth of debt, which is basically very difficult to pay off, to clear. It's the same globally, and as ever, this is the Ponzi scheme, the biggest asset bubble that is waiting to burst. So enjoy the ride while it lasts, so to speak. So there you go, the market taking out the 18,000 during yesterday's pre-market session on manipulated, cooked and contrived economic data to make it look good. It was a foregone conclusion, which is why I said this yesterday, and it's 20 odd years of watching the markets, and the manipulation and the fiddling of the figures is getting worse. There's no doubts about that. Every man his dog can see that there's no way out of the economic mess we're in because of the huge amount of debt. So it doesn't take a great mind to actually work out that anybody in politics and that sort of thing are going to be corrupt, because that goes without saying, it goes with the territory. And you will see them do whatever they need to do to keep the illusion alive, and that's exactly what you're seeing here. So let's have a look at the rest of the market, see how it unfolded. You can see the professional buying bar there taking this market out. No doubt people selling in at 18,000 thinking they were going to reverse the market as well there. Right, let's have a look at what happened during the remainder of yesterday's trading session whilst we're here. So as expected, all the news this morning on the financial news, that is, all showing Dow average tops 18,000 on US economy. That should read fiddled figures, manipulated figures, as bonds retreat. So there you go, piece of history there. Another major psychological level taken out when an economy isn't doing as well as it really is doing there. So the rest of the session, we had a potential sell signal at the beginning. Had you have taken this one, you can see this resulted in a potential loss there of 24 points. However, this was superseded by a buy signal. And interestingly enough, here you can see that the entry point is bang on the 18,000. So to actually take a trade where you've got a major psychological level just taken out and created, and that happens to be the entry in the opposite direction, is a very difficult call indeed, especially as the market is a buyer's market in the background. But had you have taken that one, it would have resulted in the situation of we've got the sell signal, this is followed by the buy signal. So you may have been able to reduce this with the reversal signal of a couple of points, but that's about it there. So we see this buy, again you can see the buying coming back in at the psychological level. Look how they bought the market back here, some selling there as people try to short the psychological level. This fails, and then you see the market being driven all the way up to the 1841, not quite making the 1850 on this occasion. So then we see the market coming back, and we get a second buy signal. We see the market coming all the way back to the 18,000 area. The low of this bar is 1803, so 3 points within the psychological level. Then we get what's known as a Fibonacci retracement there. I'll just draw this into you. Again, I'm just working on the videos for this, so as a market retraces you can measure where it's likely to come back and stop to, and this is precisely what it did. You can see it going through this 76% here, finding support, and then we're off back to the upside. So back through the entry price in no man's land at this point. Well, we're sort of halfway between the two psychological areas there, and then we see the market moving and trading all the way up to the scalp area, which happens to also be the next psychological upside target of 18,050. The all-time high now is just here, and that's 18,068, so nearly ploughing on 100 points through the psychological level during yesterday's trading session there. Let's have a quick look at the daily chart, and there you can see the complete picture there. Let's just spread the bars out a bit more so we can see a bit more detail. And again, let's just make sure we've got the right all-time high figure there. Yeah, 18,068. So all of these other ones can be removed now, as this is the new benchmark and all-time high for this market here. On the news front today, you've got USD claims at 130 and crude oil inventories. Today is Christmas Eve. Leave the desk today. No idea what's going to happen. It's going to be a half-day trading session. The market closed tomorrow, back to normal on Friday for the Dow Jones. On the implied volatility, just finish off with this. We can see that this is down from 1202 to 1156 for yesterday, and pulling back quite sharply then. Of course, it will do as the market's gone on to make a new all-time high there. Okay, that's it from me. As ever, thank you for your support. Very much appreciated. All things being equal, see you in the next one. And as ever, thanks for watching. See you soon.